Hello my fellow investors and welcome back to another stock analysis video as well as earnings report. And today guys, let's take a look at the company Pfizer. Now this company was brought up by one of you guys. In fact, it was Sebastian Diaz Saavedra, if I'm saying that correctly. And yes, if you are Spanish and I just said your name is Spanish, it's because I am Hispanic. So if you guys didn't know that, now you know that. Nonetheless though, Sebastian did recommend this one, and it's actually cool because this is one, it's a pretty mainstream company. So, you know, the discounted free cash flow essentially will work. We're not going to get anything funky. So this is going to be a fairly, I guess, milquetoast kind of analysis, seeing that this company is in the S&P 500 and is very, very well known. So with that said, let's get started with this analysis. Now, let's come over here into the earnings summary. They did have their earnings on January 31st of 2023. EPS normalized actual came in at $1.14, beat by 10 cents. EPS GAAP actual 87 cents, beat by 18 cents. Revenue actual $24.29 billion, which was a miss by $98.08 million. Now, before we head over into the earnings report, I would like to point out the elephant in the room, and that is that, well, guys, this company has a lot of controversies as of recently, and in fact, not even just as of recently, like as of like for several years. So obviously, this is not a controversial type of channel. We're not here for drama. We're not here for politics. We're here to make money, right? At the end of the day, that's what we're here for, to make money. I personally do not believe that there is any form of moral investing. In fact, I actually made a video about that several months ago, which you guys should check out if you so wish to do so. But understand that a lot of people may have a lot of sour taste in their mouth, especially when it comes to Pfizer, especially with all the news that we have had recently with them. So please understand that. Again, I'm not going to delve into that kind of drama. With that said, let's go into these earnings report. And like always, this will be linked in the description below. So we got over here, Pfizer reports record full year 2022 results and provides full year 2023 guidance. Okay, full year 2022 revenues of $100.3 billion, an all-time high for Pfizer, reflecting 30% operational growth. Excluding contributions from Paxlovid and I have no idea how to say these words. Revenue grew 2% operationally. Strong fourth quarter 2022 revenues of $24.3 billion, reflecting 13% operational growth. Full year 2022 reported diluted EPS of $5.47, up 42% year over year, and adjusted diluted EPS of $6.58, up 62% year over year, both of which represent an all-time high for Pfizer. Fourth quarter 2022 reported EPS, as we saw, was 87 cents, which was up 48% year over year, and adjusted was $1.14, up another 45% year over year. And now we actually got over here the revenue guidance. They have all of this pretty much in one whole section, kind of like that. They go on to say, provides full year 2023 revenue guidance of $67 to $71 billion, and adjusted diluted EPS guidance of $3.25 to $3.45. Full year 2023 revenues excluding COVID-19 products expected to grow 7 to 9% operational compared to full year 2022. I love how they had to say excluding COVID because their fame within the past, 3 years, essentially since 2020, was the fact that they were one of the 3 that made the COVID vaccine. So, you know, obviously that got a lot of revenue. So they're pretty much just saying, hey, even without this COVID-19, seeing that a lot less people are getting it, mainly because they already got it, or they just choose not to get it for whatever reason. And on top of that, COVID in general, like the cases have started to die down. All of this all together is going to come into a sense that they might be losing money, yet they're over here saying, you know what, excluding that, we're still expecting to grow 7 to 9%. Full year 2023 guidance for Comirnaty, I guess, I don't know how to say this, of $13.5 billion and Paxlovid of $8 billion. Revenues from COVID-19 products expected to grow in 2024 after reaching a low point in 2023 due to significant government supply in hand to start the year. So, you know, they reached a low point in 2023. However, they are expecting that to grow in 2024. Company plans to make significant incremental investments in 2023 to support launch products and R&D projects that are expected to drive its long-term growth ambitions. So now let's actually come over here into the CEO's comment. we got over here Dr. Albert Bourla, Chairman and CEO, stated 2022 was a record-breaking year for Pfizer, not only in terms of revenue and earnings per share, which were the highest in our long history, but more importantly, in terms of the percentage of patients we have positive perception of Pfizer and the work we do. As proud as we are about what we have accomplished, our focus is always on what is next. As we turn to 2023, we expect to once again set records with potentially the largest numbers of new products and indication launches that we've ever had in such a short period of time. We believe that the combination of these expected near-term launches, additional pipeline products that could potentially come to the market in the medium term, and anticipated contributions from business development has the potential to set the company up for continued robust growth through the rest of this decade and beyond. Now, the CFO also mentioned something, but I'm not really going to read it over here. I actually want to come over here and actually compare these revenues in regards to 2021. And I like how they put it very, very concise. So when it comes to the revenues, in 2021, they did, at least for the fourth quarter of 2021, they did $24 billion, and in 2022, $24.3 billion. That was an increase of 2%. Reported income was $3.4 billion to essentially $5 billion, increase of 47%. Reported diluted EPS 59 cents to 87 cents, increase of 48%. Adjusted income $4.5 billion to $6.55 billion, increase of 44%, and diluted EPS of 79 cents to $1.14, increase of 45%. And we see something again very, very similar to that of the full year. It's just much bigger numbers overall. So now let's come over here into the calculator. We got the ticker symbol for PFE, market cap of $226.7 billion with a PE of 7.37. So with a current share price of $40.34, guys, just based off of this PE, this is telling me that this is looking like a very good buy. Now, coming over here into the share price on the 1 year, it is down almost 16%. Year to date, take a look at that. This got me. This floored me when I saw it. Most companies are up on the year to date. Pfizer, down 21.3%. Absolute insanity. 52-week range is $39.81 to $56.32. Guys, this is a 52-week low company. So this actually might serve itself as a really good opportunity to buy this company. Now, they do pay out a dividend of $1.64, which is a yield of 4%. That's insane. So you know you're going to get a really good dividend amount when you buy into this company at $5,725. So get ready for that. Payout ratio is 24.32%. 5-year CAGR is only 5.51. 12 consecutive years of dividend payment. Ex-dividend date passed as of January 26. Payout date was on the 3rd of March, and they pay their dividends quarterly. And based off of the current shares outstanding and this $1.64 in annual dividends, they pay out $9.2 billion in dividends every single year. And after this is paid, they're still left with $9.3 billion in their 5-year average free cash flow. And as of their last year's free cash flow, it is a whopping $16.82 billion. Guys, these payout ratios are 35.38% for the last year's free cash flow and almost 50% for the 5-year average. So, you know, they're significantly below the 60% that I normally like it at. You know, the 5-year average is a little bit up there, but it still has 10% to go. And that last year's free cash flow was absolutely insane. So let's come into the fundamentals, starting with the net income. We got 5 years ago of $11.15 billion to 1 year ago of $31.4 billion, increase of 181%. We could see that they were consistently increasing from 5 to 4 to 2 to 1 year ago. Very, very nice. However, they did dip during COVID, right? They did dip during COVID. So I'm going to pretty much ignore it for this kind of scenario. Now, I did not think of that when I put in the 65%. So I'm actually going to increase this by a significant amount. I'm going to go with around like, I would say like an 80%. Mainly because, well, this is a pretty big jump from 22 billion to 31.4 billion from 2 to 1 year ago. So, you know, it's still okay. It's not as bad as you would think. So I'm going to give it 80%. Looking at the free cash flow, this one, however, is a little bit off. It really is disappointing, but it's off. 5 years ago of $13.8 billion to 1 year ago of $26 billion, increase of 88% with an average of $18.5 billion. We can see that, well, from 5 to 4 years ago, they decreased, but then they increased from 4 to 3. So during COVID, they went up a little bit as opposed to the 4 year ago. What caused this decrease 4 years ago? I'm not necessarily sure, right? But we can see that a massive jump occurred 3 to 2 years ago. That can actually be explained because of what? The COVID vaccine, right? Obviously, COVID vaccine started in 2021, not in 2020, or at least the latter end of 2020. So most of that kind of profit would bleed over into 2021. That's why you see that massive spike. And as of 1 year ago in 2022, you can see a small dip, probably because, well, a lot less people are taking the vaccine because they already got it, or maybe they just choose not to do it. Nonetheless, though, I'm giving this guys a 55%, mainly because we can see that from 5 to 4 to 3 years ago, kind of stagnant, and then a massive jump from 3 to 2 years ago. Looking at the revenue, we see something similar to that of, well, actually, it's not that similar at all. I am so terribly sorry for that. But nonetheless, we got 5 years ago, $40.8 billion. To 1 year ago of $100.3 billion, increase of 145.76%. And it's weird because, well, if you take a look at just the graph, you could think that like, oh yeah, it's essentially flat from 5 to 3 years ago. But they were slowly increasing it, right? From 5 to 4, that was an increase by around like $100 million. And then pretty much like almost $1 billion from 4 to 3 years ago. And then a massive spike from 3 to 2 years ago. So for this reason, guys, I'm going to give this a 75%. Looking now at the total assets minus total liabilities. This one is looking all right. I mean, they've been in the positive in the past 5 years. However, we could see that they did go down from 5 to 4 years ago, but they recovered pretty nicely. Average total assets, it is $179.5 billion. Average liabilities, it is $100.3 billion. Doing this difference, we get $79.24 billion. I'm actually going to give this an 80%. Looking at the cash flow minus the total liabilities, this one is looking actually not that bad. Now, we can see that 4 years ago was their lowest point at negative $93.61 billion, but ever since then, they have been slowly bringing it up, though as of 1 year ago, they brought it slightly down by around $1 billion or so, going from negative $74.14 billion to negative $75.3 billion. Nonetheless, though, it is still under their average of negative $80.7 billion, so I'm going to give this a 70%. Looking now at the shares outstanding, we got something, unfortunately, it's not as aggressive as I would like it, but at least they are decreasing on the 5 years, going from 5.72 billion shares to today of 5.62 billion shares. That's a decrease of 1.77% and not even 0.1% for the previous year to the current year. Now you can see that they did increase it from 4 to 3, but essentially after 3 years ago, they just continued to buy it back slowly but surely. So I'm actually going to give this an 80%. It is still down overall on the 5 year. And lastly, looking at the cash equivalents, they currently hold $416 million with an average of $1.14 billion. Looking at the overall grades, we gave the net income 80%, free cash flow 55%, revenue 75%, assets minus liabilities 80%, cash flow minus liabilities 70%, and shares outstanding of 80%, overall grade of 72. So yeah, not surprising that this company is just above passing for me. So 72%, it's yeah, and to me, the fundamentals are pretty much there. The one thing that I would think that they need a little bit more work, it's that free cash flow. But then again, it's mainly because of the spikes, not because of anything major like any negative free cash flow. Now let's come into the discounted free cash flow and let's make some assumptions. Now you can see that just with a required rate of return of 10%, we got $64.40. So, you know, it's already telling me that it's going to be a very, very interesting analysis. Now coming into the growth tab, guys, for Pfizer, the forward is estimated at negative 4.72, kind of weird. Probably because they are putting in their, essentially, their COVID vaccine losses, I guess. But I mean, we just took a look at the guidance when it came to Pfizer over here. And, you know, they are expecting revenues to grow 7 to 9% for 2023 alone. Now, obviously, that's just 2023. That's not really telling me much. But I'm not going to give them a negative. I'm going to go with something along the lines of like 2, 3, and 4% for the revenue growth in the next 4 years. Okay, so that's 4 years combined. And then for the projected share buyback, you know, they've issued a little bit. They've bought back a little bit. overall in the past 5 years is 1%. So I'm gonna go with like -1, meaning that they're gonna issue shares at 1%, 0 for the median assumption, and then 1% for the highest assumption, pretty much matching what we got today. And with that, guys, we got the target share price of $68.47 to $75 essentially, and then adjusting for debt, it comes down by around $3 to $65.61 to $72.01, with a margin of safety of 5, 10, 15%. $55.77 to $68.41. So with a current share price of $40.34, yeah, this is looking like a pretty good buy right now. So you got discounted free cash flow, you got the PE also telling you the exact same thing. Yeah, honestly, without taking any drama aside, we're here to make money. The fundamentals are 72%, at least I gave it a 72%. This is looking like an amazing buy right now. Now, this is based off of my numbers. Obviously, if you guys believe Seeking Alpha's growth, let's actually do that. Let's put in -4. Let's put in -3 for the revenue, and let's put in -2. With that, well, now we can see that adjusting for debt, guys, it is $52.25 to $57.59, and then with a margin of safety 15%, the lowest one is $44.41 to $54.71. Maybe this serves as a better representation because of the fact that I'm putting in the numbers that Seeking Alpha is saying, and even still, 15% margin of safety in the lowest assumption, $44.41, still above the current share price. So as it currently stands, this is looking like a very good buy all across the board in accordance to my assumptions. This is why I give you guys everything for free, because, well, this is not financial advice. Every investment is the present value of all future cash flow. The earnings report is in the description below, and all of these calculators are available for free because I want everybody to be making their own sound financial decisions. Please do not follow what I am doing. This is just my opinion. And by the way, full disclosure, I do own a little bit of Pfizer, like really tiny amount. I think it doesn't even get to like $1,000. So I do own a little bit of this, but even then, guys, please make your own decisions. Everything's available for free. Everything is free of charge. All we're asking for in return here on the channel is just help us grow. Like, subscribe, comment, and of course share. It really does help here. Like, it really does help immensely, guys. It really does. So thank you so much for the growth so far. We're halfway, actually we're more than halfway to reaching another 100 subscribers and getting to 2,200 subscribers. Y'all are crazy. It was in September of 2022 when the channel reached 1,000. We're already almost to 2,200. Y'all are nuts. It really is amazing. And hopefully one day all of you guys give me the opportunity to hopefully do this full time. We'll do like, I have plans to do like a live stream kind of thing, like a daily live stream, or where we cover like economic news. There's a lot of podcasts out there for like pop culture or for like politics. There really isn't any for economics, so I really would like to do that. So if you guys, the more that you guys help us grow, the faster that dream of mine, or at least I wouldn't even say dream, the faster that ambition of mine can come true. So thank you all so much. I really do appreciate it. And again, the best way that you guys can help is, sure, you guys can donate us money through YouTube, but nothing beats like, subscribe, comment, and just overall share. Now let's come into this dividend, because guys, 4% is amazing. So putting in $5,725, this buys us almost 142 shares, which ends up being an annual dividends of $232.76. Absolutely massive, guys. And by the looks of it, again, it's looking like a pretty good buy currently. So do with that information as you will. So now let's come into the options chains, and it's not surprising that Pfizer has a ton of liquidity. In fact, we got over here pretty much weekly options, and looking at the March 10th expiration, well, there's a ton of liquidity going all the way down, at least on the put side, going all the way down to $37 strike price. Now, for that, you won't really get much premiums, but honestly, actually, just in general, you're not going to get much premiums just because of the fact that it's Wednesday, and the closer to expiration you get through into the contracts, theta burn will just destroy the contract. So get ready to see, less and less kind of premiums when it comes to the puts and calls. Nonetheless, though, it's still really good liquidity when it comes to Pfizer, and you can see that a lot of contracts are being sold, or at least a lot of puts are being bought and sold at the 40 strike, 3,506 of them to be exact. On the call side, we see a ton of liquidity as well. The premiums are, I guess, a little bit better. You know, there's a ton of liquidity here at the 41 strike and even the 41.5 strike. Nonetheless, though, again, you're not going to find any more good premiums the closer and closer this expiration on March 10th gets. Looking at March 17th, though, this one, it's looking a little bit different. We still have a ton of liquidity going even higher. Look at this. It even goes all the wow. There's even liquidity, guys, for $27.50 for the put. That's insane. Absolutely insane. Now, you're not gonna get, if you were to sell a put here, you're not gonna get anything, right? You're gonna get zero dollars for the for the bid, but nonetheless, you can still sell that put. However, for the call side, we do see a ton of liquidity going. Oh my god, look at this. This liquidity just goes all the way down to like $57.50, and you would get pretty good premiums here if you were to sell it for around $40 to $41. Nonetheless, though, it's not surprising that Pfizer has a lot of liquidity, and in my personal opinion, this is not something. This is a company that I wouldn't sell puts for the premium. This is a company that I would sell puts to get my shares executed, honestly, and just have that dividend. That's mainly what I would do when it comes to this. So me personally, obviously, the target share prices are saying like a lot higher. They're saying like in the 60s. You would get a ton. Look at this, guys. If you were to sell a put in the money, you would get paid $1,200 for a strike of 52. And again, in accordance to discounted free cash flow, 55 is essentially good price, and we're at 40. So if you would like to sell this in the money, you would get a lot of premiums, right? I personally do not suggest that, but in my personal opinion, what I would do is I would just sell puts for like really low strikes. I would say pretty much like the lowest that I could get, because I mean, what's the point in getting $30, right? I mean, I'd rather go as low as like 37.5, maybe 37, or even 27.5, just because I'd rather get my shares than get actually this premium. This premium is really, really tiny for Pfizer. All in all, when it comes to this company, as I said, they do have a ton of controversies, but we're here to make money. We are Team Fatal Money, which, by the way, guys, tell me what you think of that name, because that is on the next live stream that we're going to do on Tuesday. We're pretty much going to announce that to be the name officially. I'm just giving you guys a sneak peek. So we're going to change the channel name to Team Fatal Money, TFM. So we're here, guys, to make money. End of story. Doesn't matter whether the market goes up, whether the market goes down, whether a company is immoral, moral, it doesn't matter. At the end of the day, the point is to make money. So even though they do have controversies, their fundamentals don't lie. I mean, if you don't like the controversies, pick a company, any company, you will find controversies with it. So that's why I'm of the opinion that there is no such thing as moral investing, because you can find immoralities with every single publicly traded company. So their fundamentals are really, really, they're not really, really solid. They're not like a Google, but they are pretty solid overall. And also remember that when it comes to pharmaceutical companies, you do have to take a look at their pipeline. I did forget to mention that. So please remember to take a look at their pipeline to see what is coming up next. But overall, it's a pretty average pharmaceutical company. That pretty much does it for this video. Like if you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow us on the YouTube sites. Link in the description below. So with that said, peace out. And I'll see you all in the next stock analysis video, as well as earnings report.